Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you all had a fantastic end of your week. In today's video, we are going over the weekly candle close for Bitcoin, the total cryptocurrency market cap, and of course, the total altcoin market. This weekly close is occurring in just under 60 seconds, so we will be discussing this as it happens. Of course, in the rest of today's video, we'll also be discussing the short-term price action, the current downward continuation for Bitcoin, still pushing down to that major monthly uptrend spanning back from, of course, 74,000. We're going to be discussing the significance of this trend, exactly what to expect on the short term moving into the upcoming week, and of course, what the buyers need to do to fully reverse this downtrend we've been in since 124,000. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contact our admin, check out our 54+ month trading track record, or watching a 10-minute video inside the channel. Also, if you are interested in joining our most recent campaign to get access to over $26,000 or $25,000, you can go ahead and check out this BitUnix promotion we have at the moment. Our last one we had was around about a month and a half ago, and we ended up giving away over $110,000 in rewards. So check it out. Again, click the link in the description down below to sign up to BitUnix. Let's jump into the content. Taking a look at the price action, we have seen a little bit of volatility over the weekend. More or less, we just saw the price action push sideways. We had this ascending triangle formation, which we broke toward the downside from, but we saw a continuation through that, through the range high, pushing back up into the 200 moving average and the 50 EMA on the hourly and the 4-hourly chart. The most important thing here is through the weekend, although we did see a little bit of an attempt to go upwards, we did not breach this $119,000 lower high over here. We talk about when we're looking for the buyers to really step back in, we need to see a structural shift. So we need to see this current pattern, which is of course our highs, our lower highs, lower highs. We need to see this break. We need to see the price action breach one of these lower highs to signify some strength to facilitate continuations higher. Until then, the short term is still looking relatively weak, and it does appear like we are still looking for continuations downward into either this horizontal support at 115.6, or of course, as we mentioned moments ago, this multi-week, this monthly uptrend spanning back from 74,000. We'll come back and discuss this in just a moment because, of course, a weekly candle has just closed for Bitcoin. There is a lot to take a look at. Of course, we'll come back to it. Taking a very brief look at the total cryptocurrency market cap and the altcoin market cap, we saw a respectable close here for the total altcoin market cap, just at that $1.06 trillion level, still at resistance, and the total market cap, of course, a pretty bearish candle here, again closing at resistance. So the weekly closes for both these charts were not adequate to signify direct continuations, but it does open up the potential for continuations upwards depending how Bitcoin reacts this week. So we'll discuss all of that in the video today. Let's move over to the market data. 24-hour volume up 22%, 221 billion. Liquidations up 122%. As you can see, weekend shenanigans, where you could basically have an even split between longs and shorts. Just a flush up, a flush down, just complete sideways chop. No real clear short-term directions unless we're zooming into the very small time frame. But if we're looking at the hourly direction, we are still in this overall downward move, like we mentioned. Moving over to the S&P 500 and the DXY. The DXY hanging on over here to this weekly uptrend, maybe just opening up below as it does appear. Again, if interest rates do drop, we do expect the DXY to continue towards 92 to 93. Again, depending on how interest rates drop, when they drop, how aggressively they drop, even if they do drop, the overall narrative will determine how fast we do see the DXY move toward the downside, or whether or not we'll see a reversal back to 100. But all in all, provided we remain below the change of character, we are expecting downward moves. If we look at the S&P 500, the S&P 500 here is looking solid. As we mentioned, the key level we need to break through here is going to be 6,500. As you can see, the price is struggling to even close a daily above. We've had 2 attempts in the daily, both of which failing to close above. This is going to be the level of which we need to break through to see continuations. Until then, 6,500 is going to be a new level of horizontal resistance. Of course, if we're looking at something like the daily chart, even if we're looking at something like the weekly chart here, we can see the potential for a little bit of weakness developing with potential bearish divergences developing. But all in all, if we're looking at the trajectory of the trend is very much still upward. We do have this uptrending diagonal trend line we are holding above. And of course, we are sitting above that 50 EMA. So provided we can sustain above these 2 respective levels, the trend is expected to continue. But if we do break this uptrend, that is when we expect corrections to occur, potentially at least back to 6,250. And if 6,250 is lost, which is its prior base of support, we would then be looking for mean reversion to the 200 EMA. So watching those levels moving forward. Let's go ahead and jump into Bitcoin. As we mentioned already, go ahead and sign up to BitGet, BitUnix, and BingX. Specifically, BitUnix is the exchange we primarily use. You can find the links down below. You get a lifetime trading fee discount of 15%, which can build up to 45%. You'll support me making this content for you on a daily basis, and you'll be trading on exchanges I use and I trust. And of course, you've got access to these exclusive campaigns we run every single month. So if you're already trading on BitUnix, congratulations, you get access to these promotions. If you're not already on BitUnix, you can go ahead and sign up. You'll get the discounts in your trading fees to support the content, and you'll get access to essentially free rewards every single month. No other community out there does this on a monthly basis. Check it out. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get back into it. Let's start on the weekly chart for all of these charts, then jump over to the short term, because again, we are still looking pretty grim. We are still looking for continuations down. There are still some warning signs. There is still hope, but we need to clear some major resistances before we can really hedge into that upward direction. So let's start on the total cryptocurrency and total altcoin market, as these are going to be the easier charts to discuss, and then we'll go ahead and jump over to Bitcoin. So the total altcoin and total cryptocurrency market cap, this chart, the one on the left, altcoin, the one on the right. We did see our weekly candle close just moments ago for both of these charts respectively. And as we mentioned going into last week's video, we saw some pretty good movement last week. We saw the week before a retest of this horizontal level of support at 3.63 trillion. Now we know this is a high time frame level of support. Essentially, this is the point at which we need to remain above to have any sort of potential hope to continue upwards. If we drop below this level, we immediately then expect direct corrections all the way down into 3 trillion, which is going to be our sell side liquidity. So we're looking for bearish triggers, the most obvious bearish trigger would be the loss of the $3.63 trillion level, which would result in continuations down to $3 trillion, which is a sell side liquidity. Of course, for that move to occur, Bitcoin will also need to drop. So do remember, when we're talking about the total market cap and altcoin market cap, when we talk about upward moves or downward moves, we need to see Bitcoin move generally in that respective direction as well to facilitate these moves. So when we're taking a look at the current weekly candle close, we did see a failure to break through the weekly range high, which was sitting at around 3.95 trillion. We saw during the week a massive move up to 4.17 trillion as Bitcoin pushed into a new all-time high, followed by a equally large correction back under the weekly range high. Again, as Bitcoin drops back under the uptrend it developed from the weekly low into, of course, that 120,000 resistance and then back below it. For the total altcoin and cryptocurrency market cap to continue upwards, and I do mention the altcoin market cap there because, of course, we know for the altcoin market cap to continue upwards, we need to see Bitcoin dominance hold sideways, or best case scenario drop as the total market cap rises. We would like to see a weekly close above 3.93 trillion. That would be a sign of confidence that the market is ready to continue upwards again, but until we break through here, this is going to be a weekly point of resistance. If we do close this weekly candle below, we could be looking for rejections down. If we close above, we'd be watching for continuations upwards, and of course, what will determine the direction of this market will be very much determined by how Bitcoin reacts. So we'll come back and discuss that in a second. The altcoin market cap over here, as we've mentioned, it's had a bit of trouble closing above that $1.06 trillion level in the weekly. And yet again, it has showed us how challenging that level has been for it. We've seen now 1, 2, 3, 4, 5, 6, 7, what's that, 8, 9, 10, we've had 10 separate weekly candles either retest 1.06 or during the week push above 1.06 only to close at or below the $1.06 trillion resistance. So we've seen the market over here for the altcoin market really show a massive amount of resilience at that 1.06, a massive, amount of resistance, should I say, at that 1.06, which if we break will likely facilitate in the next move. So the altcoin market, just like the total market cap, it's sitting at a point of resistance. If it breaks, if Bitcoin does push up here, it is very likely we see the altcoin market rally this week as we see the total cryptocurrency market cap rally this week. For us to be, certain for corrections, Bitcoin will still need to lose this monthly uptrend. We'll come back and discuss. So again, if we look at the short term, although the short term looks weak and we're in this downtrend into support, when we're zooming out again to like a daily chart or even a weekly chart, we are still very much in this higher time frame uptrend. So there is still, if we're looking at the macro trend is still upward, which is a good sign because it enables both these markets to continue upwards if Bitcoin does push upwards on the short term. We'll come back to Bitcoin in a second. So that is the altcoin market. Again, if we're zooming down to a daily chart, on the daily chart for the altcoin market, we saw some good things during last week. We saw again the price sustain above the $1 trillion level, which is over here. You can see there's two black lines. And of course, the baseline of the Ichimoku cloud, we were able to sustain above. So the altcoin market, for the most part, is actually showing a little bit of resilience over here, and it's still very much in an uptrend. Again, we do have our uptrend spanning back from those lows at around 750 billion, respective level around 73 to 74,000 for Bitcoin. So we can see we are in an overall uptrend, which is a good sign. But of course, we do need to see this trend continue through Bitcoin facilitating continuations by sustaining above this weekly/daily uptrend. Let's come back to that. Let's talk about the weekly chart for Bitcoin. So when we're looking at the weekly chart for Bitcoin, there are really a few key levels we are watching, and there's a lot going on for Bitcoin in the weekly chart when we're looking at momentum, when we're looking at trends, when we're looking at speculative top dates, when we're looking at the cycle. There's a whole heap going on. But when we're looking at leading indicators, as you know, I'm a momentum trader. I focus on momentum, so I'm watching the momentum. Particularly, I'm watching the RSI here. I'm watching our moving average to to gauge overall volatility, and I'm watching key macro trigger points. So when we're watching the weekly close, this weekly close for Bitcoin was neither bullish nor it was bearish. It was basically redundant, meaning it had very little macro effect. There's been very little impact on the weekly chart as a consequence to last week's price action. We are still underneath the uptrend, the RSI, and we are still sitting above the 62.09 level on the RSI. So we've had no significant shifts in terms of momentum. We did have the RSI breakdown about 2 weeks ago, which of course resulted in a bit of a correction. We've seen this weakness developing up over here ever since, but since then we haven't had any significant momentum shifts on the weekly. The warning signs are still there though. We do still have negative momentum on the weekly, which is adding to this downward pressure in the price action, this inability to really push up into these highs over here and sustain. We do have negative momentum on the weekly. And of course, we do have the looming risk of the 62.09 breakdown pending. As we know, if we just look at the last few months of price action, or the 24 months of price action over here since 2023, since essentially the bull market started, every single time we have seen breakdowns on the uptrends of the RSI, these respective uptrends, and I'm going to show you over here, we have these consolidations, we have these expansion moves. During these expansion moves, we develop uptrends on the RSI, which is normal, right? Momentum is rising. Eventually, we generally see these RSI breakdowns, which represents the momentum has exhausted and the sellers are in control. We then see directional continuations to the 50 EMA and the Gaussian channel upper band. We saw that once, and we saw that over here again with a directional continuation to the Gaussian channel and the upper band, the 50 EMA. We have seen the breakdown on the RSI again. Now, what we also saw during those prior two corrections is that when we saw the breakdown of the 62.09, instance 1 over here, instance 2 over here, that is when we saw that larger move towards the 50 EMA. So we look at exactly when those breakdowns occurred on the 62.09. Let's go ahead and delete some stuff and draw vertical rays in at those points. You can see over here, and you can see over here, we then saw larger directional moves towards the 50 EMA begin from that point. So again, if we break below the 62.09, we've had the weekly negative momentum shift. We potentially as well will have the breakdown of this monthly uptrend, which will facilitate larger corrections of Bitcoin. Where could we go? We're looking at 100,000, which is going to be that sell side liquidity, which would line up with the total cryptocurrency market cap correcting to around 3 trillion. So we can see this confluence between these hypothetical theories and these potential moves. Now, this doesn't mean this is going to play out. As we've mentioned already, while we sit above this uptrend, we are still technically bullish. We are still technically in an uptrend. These are just warning signs. And I used an analogy last week, and I'm going to use it again. When you're in a car and you're driving around a sharp bend, or a sharp bend is coming up, it says, a warning, slow down to 50 kilometers, or slow down because there's a swerving road ahead. It's not telling you you're going to fall off the cliff. It is telling you to slow down just in case. And that's exactly what momentum tells us. It's a leading indicator. It doesn't tell us that these things are going to happen. It tells us there's a possibility, a strong possibility that if you do this, or if this happens, we will see these reactions. And it's exactly what this RSI tells us here. It tells us momentum is weakening. If the buyers cannot sustain this trend, we will likely see the sellers take full control, and that will push the price down into our liquidity levels. That is exactly what we are seeing play out, and exactly what we are receiving from this data. So let's jump into the short term now. Bitcoin is objectively not looking good on the short term. We have lower highs developing through this pattern. Now, as we mentioned, I'm going to say it one more time, the most important level we have here for Bitcoin is this diagonal uptrend. Now, this diagonal uptrend represents the trajectory of this trend over the course of the last 3 to 4 months, if not more. You can see that we had a major diagonal downtrend. We broke the diagonal downtrend. We entered a major uptrend. Ever since we entered this uptrend right over here, 84,000, we have been essentially above this trend line. If we break this trend line, it will be the first time since 84,000 that we've had a major trend reversal on the higher time frame, which could facilitate corrections again into the sell side liquidity levels, which would take us to 100,000, facilitating the 62.09 breakdown, and of course facilitating the retest of 3 trillion on the total. However, while we are above this trend, the potential for bounces and continuations are still very much present. But the possibility, the likelihood of that is lower than the likelihood of a breakdown according to the short-term price. For Bitcoin to become short-term bullish again, we need to see, and as I described in our Telegram post, I believe, in yesterday's post, or the day before, I mentioned that the key level we need to break through for the buyers to take control again is 120. For us to even see the price push to 120, we needed to clear 119, and we failed to do that. We didn't even push up to 119. So again, now we've got another level of short-term resistance we need to break to even push into 119, to then even push into 120. So we've got 3 levels of resistance here that the buyers need to push the price to facilitate these strong moves back into all-time highs. Until then, the likely move is into 200, into there's a retest of this major uptrend, and if lost, we then come back down to retest 115. Now, if we're looking at a higher time frame, such as a daily chart, we do have the potential for this bearish divergence to extrapolate from the daily into something like the weekly chart. Now, if we're looking at the weekly chart again, we've got very important levels such as the Gaussian channel and the 50 EMA, which we could retest if these trend lines are lost and if the 62.09 is broken down. So this video is a warning. This is a warning video because there is a potential for a crash coming. There is a potential for quote unquote a local top to develop. Now, will that be the macro top? A lot of people think the 4U cycle is going to continue. Now, whether it continues, whether it breaks is kind of irrelevant. It's not actionable information. We may continue upwards, but I'm not going to sit here and just ignore what is happening on the price action to trust a theory, a cycle theory. It may break at some point. So to put it very simple, to give you my personal stance, I'm bearish on Bitcoin at the moment on the short term, and as you know, I have been ever since we broke the break of structure. You guys would know, I've told you in the video, break the break of structure, I turn bearish on Bitcoin. For the short term, I'm looking for corrections back to 115. If we retest 115, there's a good chance we then bounce back up from there. But we need to see how that plays out if and when we retest that level. If we're looking for earlier signs of reversals, the 119 needs to be taken out. We need to break through and sustain. We do that, we then look for continuations. Again, break of structure becomes a target if we do break toward the upside. Until then, we are still watching downward moves. The weekly closes were not ideal. They weren't terrible, right? We closed at resistance. It could be a lot worse. We could have seen rejections. They weren't terrible, but they weren't good enough. They just weren't good enough. We're still at resistance. The Bitcoin's still under resistance. We're still on a downtrend. It's still moving towards key levels of support. And these levels are very important, as we mentioned in today's video. If we lose some of these levels, we run the risk of these higher time frame momentum shifts, which could drag the price lower. So take that as you will. Of course, we need to trade level by level. If we see today the price action push up aggressively and clear these levels, well, then we look a little bit more optimistic in tomorrow's analysis because we're expecting then continuations. But for now, downtrend present, key levels, we are below them. We are watching for rejections and continuations into key points of support before analyzing and continuing from there. So if you take anything from today's video away, take away this. The downtrend we established from last week's rejection at 120 is still present. We are still in a downtrend. Although this downtrend is weakening, right? It is weakening. It hasn't reversed into an uptrend yet. We need to break through 119 to do so. Until then, the risk of corrections into an uptrend, which is a monthly uptrend at 115, is still present. The weekly candle closes were okay, but they weren't enough to be entirely confident that we are going directly upwards and aggressively upwards. For us to be confident that, we need to see Bitcoin push through 120 yet again. And in terms of the weekly chart, the warning signs in regards to the momentum are still present, and these will be present almost indefinitely until they break, because at some point they will break. And of course, we need to see the breakout of this downtrend in the RSI to essentially eliminate the risk of these moves. So pay attention to that, guys. Thank you for tuning in. Have a fantastic rest of your day. Hopefully we do push upwards. Hopefully Bitcoin can break through 119. Of course, we want to see the moves toward the upside, but we need to be aware of these risks and of course be able to respond if they play out in that regard. Thanks for tuning in. Catch you guys in tomorrow's video. I'll see you then. Bye.